Huge bear flag breakdown for the S&P 500 on Friday. You can see here over 100 points to the downside, 2% on the day. So pretty hefty downside move so far. And what's really interesting about this move is we didn't really see much put flow supporting it. If anything, we actually saw a lot of put selling near the lows, and these were likely sold to open just based on the volume to open interest. You could see on some of these like 2.6 million for this 541 put that was sold for the 404 strike. This one over here, 2.9 million, pretty much the same thing just for the 545 strike. So a lot of put selling. These whales are trying to capitalize on the heightened IV of the drop. And they did this at a spot price of 555 high. This was near end of day. So they got this close to where the current low of day is. So this is interesting to me because previously, if you remember in our other videos, they were pretty much behind the entirety of this downside move. It was about negative 10% from the high to low of this correction. And it seemed like almost every single day we saw a bunch of puts hit the tape. And I could even show you really briefly here on the historical flow. If we look over here, this was end of February roughly to early March. We can go historical flow, go all the way back to, let's say, the 24th of February to the 14th maybe of March, go to SPY here, and I can show you just for over 1 million in premium, it was 89.6% puts to 10% calls. So very heavily skewed to the put side. And you can see, look at all of these orders, 533 strike when it was at 560, 531, 544. All of these puts were super aggressive, even back in the 560s. As I scroll down, you'll see it's even higher prices that we saw a lot of those puts come in all the way back up to even the mid 570s up here, where we started to see more of the onset of these aggressive puts. So they've been behind most of this move, except we didn't see them get behind most of this, except for one lucky AMD whale, which you could see over here in the power alert section. This guy caught all of the move on AMD. It went 552% this power alert here. So their initial investment went up 4.1 million in profit by the time that it did expire. So they did trim along the way. I noticed that there was a volume spike, as you can see, when they were selling some of their orders, but at least for runners, as far as we can see, they were able to hold for most of the duration. So this was an amazing trade by them. But again, this was just for AMD, and this was a relatively small order in the grand scheme of what we've been seeing on the S&P 500. So I want to go back over here on the S&P 500 and show you some more of these put sell orders and what that could entail for this week. And then also show you some of the technicals here that I'm watching. Because remember, I don't just use flow. I don't just use technicals. I like to use both together to derive my thesis. And in this case here, just based on the technicals alone, this is a very clean bear flag breakdown. And so far, we have yet to see the current lows get invalidated. So going forward, a couple of things to keep in mind for as early as this week. First of all, if I go to the 15-minute chart here on SPX, there is a valid gap down that remains unfilled. We will be in a bearish environment until this gap fills. The reason I say that is because this was a trend down day after a gap down. Whenever you have one of these, that signals excess bearish momentum, and the only way you can invalidate that bearish momentum is with a gap fill. So this level around 5,700 needs to fill in order for all of this to be invalidated. So even if we were to bounce up, let's say early on this week, if it were to bounce to like 5,640, 5,650 or something, that doesn't mean that I'm suddenly interested in going long, because all of this from Friday is bearish momentum, and we need to go all the way up to fill that gap up here around 5,700 for this to be invalidated. So because this is all the way down here at 5,580, there's that opening for lower price discovery from here. So these bounces up to here, as long as it doesn't fill this gap that I drew from up there, as long as it doesn't fill, we will probably see something like a rejection from there. So this is very bearish at the moment, needs to fill. So again, we'll not go long until it fills. And so far it's either chop or you could short the rip. If it were to rip up to what I just showed you here, like 5,640 or something, then a short would be valid. If it does fill this gap, and it probably will at some point within the next month or two, of course, I don't know the exact time range of that, but whenever it does fill, that would be very bullish, and that's something I would go back to my long bias and see something like a retest of the previous range. Another thing I want to note over here is the lower end of the range was retested. If you remember in the previous video, I was looking for this over here to get retested, which was the range that I'd consider to be more valid, up here around 5,836-ish. You also could make an argument for even higher, up around 5,856. Both of these are valid. It really is a demand zone, now supply zone since we're under it. But I was looking for this to get retested before some type of rejection. In this case, it only retested the 5,778 level over here and then rejected immediately. So in this case, this shows that there's a lot more weakness than I thought because it did reject on the first possible resistance from that previous range. Remember, this is the range over here. We were stuck within it for 3 months. I could circle it for you. But this is a very powerful range because it broke to the downside and so far has been a downside move followed by a retest of the lowest end of the range, an immediate rejection with momentum. That is very bearish. Can't negate that at all, even if the flow didn't seem to complement that downside move on the retest / rejection. It did before on this move over here. So far, would not be surprised to see more puts added if we open near the lows or even lower with a gap down come Monday. So that's something to keep in mind. Also, another thing to keep in mind is this blue trend line over here. This will be critical because this is from this low end pivot of the correction last April. Honestly, more so of a pullback, if anything. But over here, we had this pullback and then we had another pullback back in August. So this is where the next pivot of that trend line is, and we have yet to retest this. So based on how aggressive this downside move was on Friday, it would seem like this trend line would be the target of this bear flag, the minimum target that is, just because of how aggressive this is. Again, that would be negated if we were to fill this gap, but until that gap fills, this is likely the target in the very near term, like as soon as this week. So that's why I wanted to share it. There still is some unfinished business to the downside to satisfy this trend line right here because it did not on the initial pullback. So that's just my understanding of where we are right now. And again, everything is dependent in terms of the bullish aspect of things. Everything is dependent on this filling this gap over here. And that only would warrant upside to retest the 5,778 and likely 5,856 after. But this will not go back to all-time highs until something like 5,850 is reclaimed. You need to reclaim where the lower end of the previous range was over here, what I just showed you with this rough sketch of the purple line. You need to reclaim the previous range in order to have a shot at going back to all-time highs. Until that is reclaimed, you are under a bearish breakdown of that range, and you will see a bearish environment until price is back over. So that's very key. I've been reiterating that now for a couple of weeks. I personally, again, wanted to see it go up to retest this level and then determine, hey, are we going to see that rejection from there, or is it going to reclaim and just rip for the skies after? We did not even get that retest over here. We only got the minimum retest of 5,778, which is this low over here from January 13th. And so far has been a clean rejection. So a couple things that bulls need to have happen within the next month to get this thing going a lot higher. In the meantime, though, intermediate term, this is a bearish breakdown of this bear flag, and there looks to be some lower price discovery in the near term. So that's what I'm looking at on the S&P 500. And again, a lot of put selling, so there really wasn't much to complement, at least for the mid and latter half of the session, wasn't much to complement that downside move on Friday, mainly the put sell orders, so they want to collect that premium. And that also doesn't mean that they're looking for a bottom necessarily at around 5,580, 5,590. That could just mean they're expecting chop this week. Like, this is the heightened IV environment right now because of this dump, and we can see that evident based on what happened to the VIX. Over here, we saw a nice 15.95% up day on Friday. So they want to collect that extra premium. But then also at the same time, if it were to chop this week, let's say it just for whatever reason, traded around 5,550, went up to 5,600, maybe closed the week flat, they would still benefit on that if there were to be a vol dump by the end of the week. So because these expire end of this upcoming week on April 4th, they could just be betting on this flatlining, and it's not necessarily a directional bet that they otherwise could add something like calls, for example, if they were expecting something like a bounce. So that's just something to keep in mind. But at least when we see orders like this, it typically means they're not predicting this thing to just completely flush out and just be an extreme downside move immediately, at least come Monday or Tuesday. So they could likely be trading them in the short term and want to see it chop for a bit and have that IV drop so they can profit, or at least for the entire week, see something like a chop or upside move so they could profit as well. So that's kind of what they're looking at in the near term. That is a very near term bet. As for a little bit of the longer term, like week plus, this is still a bear flag breakdown. So we have to treat it as such until, again, I'm going to keep reminding you guys in this video, until this gap fills.